All right, good afternoon, everybody. How's it hanging? I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is the same, except I'm out of QUBT, my QUBT short that I had on yesterday. Oh man, what a week! I'm tired. It's been a week. The trading this week, the trading this month has been insane. Just with the dispersion trade on things getting extended in every direction, and all these crazy BS companies going insane, and then the Fed hitting yesterday. I mean, it's been a month. That is for sure. SPY closed unchanged. I'm just seeing that right now. Because I guess we closed on lows yesterday, gapped up, and then closed on lows again today. SPY's closed unchanged. I think it was an inside day by like 5 cents or so in the SPYs. The Qs closed down 0.5%. The IWM closed down 0.5%. So kind of a nothing day. A lot of the times the day after a Fed day can be a trend day. Reasoning for that is most of the time the big money movers out there don't make immediate decisions the second that the Fed comes out. They take the evening to digest it, and the bigger trend oftentimes comes the next day. This was definitely a different situation because yesterday's move was so big. I guess yesterday's move shocked the market to such a degree that everyone really rushed to the exit. So yesterday's move was so big that today turned into a little bit more of a consolidation day. It certainly felt like a down day to me. Maybe that was because I was just so focused on like the QUBTs of the world that got absolutely demolished. But we gapped up this morning. The high of the day was 6 minutes into the day. And, we kind of consolidated and trickled lower throughout the trading session. More or less what we expected, right? The game plan this morning was that we were getting a gap up after a bearish engulfing penalty box style trading session yesterday after the Fed, and that bounces are sellable. The gap up was sellable. And, basically we opened up kind of in that no man's land zone where we're not extremely extended to the downside where you want to think about coming in on the other side of the market, but we're extended enough that the short can sometimes be tricky from risk-reward perspective. Even with that, though, I was trying to be an advocate of being a little bit more aggressive on the short than I probably would be normally. Basically looking to, kind of short the gap up off the open while recognizing that it was possible for us to bounce back to 595 just because of that moderate degree of downside extension that we had. I like the idea of being a little bit more aggressive on the short side. So I'm not sure if anybody was able to really capture the market and short that gap up this morning. It did work out well. Not the easiest trade in the world because, again, you could have pushed up several more dollars from where we opened. But yesterday's candle was just so nasty that it led to, some further selling today. Even though the SPYs closed flat, it led to some further selling today, intraday. So that worked out pretty well. We closed the day not quite at, or did we? Hold on here. Oh, we are at extreme extension. I thought we closed just outside of that. But I guess we sold in the last 15 minutes of the day. And that's selling in the last 15 minutes of the day. So the ADMA on the daily chart is 597.50. So I would consider extreme extension to basically start at 587.50. Obviously, this ADMA is going to move lower tomorrow, so keep that in mind. But in the last 15 minutes of the day, we were just above it by $1. 587.50 is kind of that point. We sold off in these last 15 minutes to make new lows in the day and close on lows, and that just barely put us in that extreme extension zone. I'm in no rush to buy this market, to be totally honest. I said this at certain points earlier in the week and last week. We change our thought process as new evidence presents itself. and I went from being like a mega bull in mid-November to like starting this week off by saying, I'm going to be a little bit, I'm still bullish, but I'm going to be a little bit less aggressive on the bull side because of how far we've come. And yesterday was just a game changer. It was a game changer for the story of the market, for the qualitative fundamentals of the market, and it was a game changer technically for the market. So that was all I needed to, flip my switch from being like extremely bullish to being bearish to neutral, depending on the time frame that you're thinking about. Big picture, I would say I'm still neutral or even bullish, but more smaller or intermediate time frame. It's like I said, this market is guilty right now until it proves itself innocent. Yesterday was one of those days to take notice of. Technically, bearish engulfing candle, pretty much across the board. You don't easily recover from yesterday's candle. Big picture, we are still very much in a healthy uptrend, and it's been a healthy year. I just moved my moving average by accident. Let me fix that real quick. There we go. We are still within the confines of a major bull trend here. So the trend is still your friend. The 200-day is still rising. The slope of it's still up, right? So that means that your big picture essence of trend is still higher. That 200-day is all the way down to 551 for the SPYs. So, big enough of a picture. I'm still a bull, but more tactically, smaller time frame, intermediate time frame. I'm not right now until the market sets up better. It proves itself by negating yesterday's candle, or it pulls in deep enough that gives me a good enough of a execution setup back to the long side that gets me excited. What would that look like? I can give you an example. Like my ideal situation on this market, and most of the time my ideal situation is not what happens. It would be too easy if it was that way. My ideal situation is that we get like a 1-2-3 play to the downside tomorrow. So we had this nasty Maribozu yesterday. We had an inside day today where we're still kind of bordering on this extreme extension. My ideal situation would be that we have another actual bigger down day tomorrow, maybe bringing us down to 580, 579, something like that, followed by a gap down on Monday. If that happened, I would be loading the boat to the long side on Monday. Gap down on Monday to what are these lows? These lows are 567. That's a little bit deep. I don't know if we can test that. But if we had, I don't know, a gap down like a weekday tomorrow followed by a gap down on Monday that gets us to maybe the mid 570s, somewhere around there. That would be like a trade where I'd be loading the boat on that to the long side, initially looking for the bounce trade, but holding some in case the bounce back becomes a full on reversal. But one step at a time. We still have tomorrow's trading session to see what happens. I'd love to see continuation of some panic selling tomorrow because I think that would lead to the bigger long setup. If we just digest, I guess it wouldn't be the worst thing in the world either to get another digestion day tomorrow that becomes like a bearish consolidation that breaks down early next week to begin to give us broader downside extension that could be more viable. But we'll see. We talked about it yesterday. Yesterday was also really just a day one. I know it got us into some extreme extension. So if you had the tenacity to buy the close yesterday, you caught the gap up this morning. So basically, you bought the extreme extension. You caught the gap up this morning. You liquidate that long. You're golden. And that would have been probably the best way to take advantage of this kind of juxtaposition of yesterday only being a day one to the downside, which you typically don't want to buy, but it also being extreme downside extension, which you might want to consider nibbling on. You basically take it, you liquidate the position into the gap up or into the small bounce, you're out of the way, and then we see if further blood flows into the streets or not. That's where we're at. The gap up this morning, you had to be a little bit brave to short it because there's still decent extension there, but that worked out pretty well. And at the same time, it turned into a little bit of a consolidation day. Qs managed to break yesterday's low. Qs are just outside of extreme downside extension. If we can work our way lower tomorrow, they'll be there. if I can get a similar pattern as I just described with the spies, with the Qs over the course of the next couple days, I would load the boat at a certain point. If we get, big downside extension into like 505 or something like that by Monday or Tuesday, I'd be pretty excited to come in and buy that. The IWM is still in extreme extension to the downside, $9 extended down, coming into bigger support here in this 517.50 to like 515 area. So it's pretty much same deal across the board. Correlations increased, as they tend to always do in down moves. When the VIX moves higher, we went from this heavy dispersion trade that we were dealing with for almost all of December into just correlations increasing into the sell-off, which, I like the idea of looking for some rotation into value, into safety plays a little bit, which also is some of the most oversold areas of the market. But the one thing I was trying to warn about a little bit is like, hey, I like XLE, XLU, XLB today for longs, but if the market sells off and correlations remain high, which they probably do into sell-offs, then you're going to get selling even in the areas that I think right now are best to buy. And that's exactly what we got. I mean, this move in this XLE is like really getting ridiculous. 83 is a big support level. I know, we tried to scalp some ExxonMobil long into the close. I was able to make a few dollars on that, but their big selling balances came out on the energy stocks that made that trade difficult, and I gave back some P&L, but still managed to finish positive in it. So that's just kind of where we're at on the index level. Tomorrow is OPEX. I think tomorrow is quad witching. Quad witching is always kind of a wacky day. I think that there's some imbalanced stuff that should be settling tomorrow, but quad witching is always a wacky day. I don't love that trading session. I find that the price action, especially into the close, is for me at least. I've never found an edge in it. To me, it's always been very, very kind of random and difficult, and all these stocks tend to close like perfectly on their whole numbers on the quad witching day. But we'll see how that goes tomorrow. We'll see how this market continues to set up. But I don't really see any reason yet to come in and be overly bullish. One of the themes that we discussed for today's trading session was kind of this continued rotation of the momentum trade. Maybe the XLE, XLU, XLB can catch a little bit of a bounce, but also just the momentum trade unwinding. If we circle back to Pat's note, which we discussed this morning, this note from the Goldman portion in here, I was really kind of hanging on. I'll just kind of reread that, look at it again. Basically starts with the midpoint of the sentence. The desk continues to be cautious on momentum and continued risk of unwind going into the year end. So they're looking for unwind of momentum into the year end, which has already started to happen a little bit. From a thematic standpoint, momentum is long, AI, the VIPs, which I'm assuming is like Mag 7 related, and power, while short, health regulation, renewables, China, and tariffs. So kind of looking for a little bit of an unwind of that. So a bounce back in some of those beaten up areas and a sell-off in some of these leaders that have gotten crazy. So kind of off of that note, I was looking for, AI and crypto to sell down today. And a couple of my ideas, I didn't have the opportunity to really take any of my ideas today. I just, I certainly overextended myself yesterday with the amount of things and positions that I was trying to manage, and some very, very aggressive game plans. Today was a little bit more manageable, but still pretty hectic in the beginning of the day. But I was able to recognize, I was like, I got some things I like. I like that AI short, I like that MSTR short, but I can't involve myself in them right now until I'm able to offload some risk in some of these trades that I'm in. But they worked great if anybody was able to take them. We talked about an AI short on the break of this uptrend. I normally don't like these like shorts into rising moving averages, but it was a whole slew of things kind of hitting here at once that I thought could make this a good trade. AI got downgraded. It was the break of a upward channel, so like a momentum break of support of an upward channel, and the theme that we just discussed of money rotating out of AI. So that worked out really well. We talked about MSTR short today. The support zone, it was very wide between 340 and 360. It's a very wide support zone to short through. But we said in the morning meeting today that you could probably just be short the open versus like the whatever that pre-market high was that the thing put in. So I don't know if anybody was able to capture that or any of this other crypto stuff, but that worked great. This MSTR is looking pretty bad here with a close below 340 as it continues to potentially hold below support. So we'll watch that. Crypto itself got whacked as well, but Bitcoin just falling back down to the 21 EMA on the daily chart, so it's not necessarily the end of the world. Ethereum a little bit more of a problem technically with the way that this thing broke, but that MSTR was a pretty good short trade today. Yeah, I mean that basically covers it. We couldn't really get too much of a bounce in XLE because the market was still weak. XLU was a little bit better. If anybody went after that one, my focus was very heavily still on this QUBT, which it was not an easy trade yesterday through today, because yesterday it was so strong and was able to really continue, not for the faint of heart, moving dollars at a time, and then today it gapped down. So the gap down, it's always a better trade if you're coming in flat, if you get like that gap up to be able to short back through the previous day's high and short it on the way down. So it didn't make it easy. For me, I had a very aggressive game plan, but it was a game plan that allowed me to build in more short as it went up yesterday. And then this thing was nuts yesterday. It really was, because I want to say I got bailed out a little bit by the Fed after 2 o'clock, but did I? It was very strong after 2 o'clock. These stocks are trading in their own world. They don't necessarily care what the Fed is doing or what the market is doing, and it went out almost on highs yesterday, traded down after hours, gapped down this morning, so it made it difficult for anyone to come in and put a new trade onto the short side. But I stuck with the trade yesterday. I stuck with it overnight on size, and then it got smoked this morning down to my target. I did a decent amount of research on the stock, and I read a short report that came out from who was it? Short report that came out from Iceberg Research. That was on November 27th, and I learned a little bit about some of the secondaries that they've done at like $2.50 and $5 on the way up. Company doesn't even really have much revenue to speak of at all. I think they did $300,000 in revenue. I don't remember if that's a quote from the fiscal year 24 so far or 23, but $300,000, I think it was $311,000 in revenue. And I just, I know that these charts eventually have to correct down to the ADMA, so and could potentially go lower. I think $10 is even reasonable, or even $10 or $9, like a retest of this breakout zone is very reasonable on this. I'd like to think that I was still pretty greedy though with the move to 14 that I was looking for. I had a target of either 14 or the ADMA on the daily, and I got it. So it turned out to be a pretty good trade. I did keep still some of this SOUN. I'm honestly probably being too greedy on this. I probably should have gotten out. Same deal. My target on this had basically been either 1650 or the ADMA. The ADMA is above 1650, so I'm adjusting my sizing and my game plan as the trade stretches on and the ADMA gets above that 1650. It got close enough that I probably should have liquidated. ADMA is at 1740, low of the day is like 1780 or 90 or something, and the stock was all the way at like 25 yesterday. But I did still keep a little bit, just because, I don't know, I'm kind of playing with the house's money and I'm being a little bit greedy with it. But, we'll see. This is another one where it easily could still correct back down to, $15, $16, but I'll probably be out before then. So those names are still really big focuses for me. The Tesla is still a really big focus for me. Tesla, for the most part, traded pretty weak today. Low of the day is 4.20 and 2 cents. I'm kind of looking for a move back down to 400. If the 21 EMA gets above 400, I'll probably take pause on that a little bit. But I'm gonna try to stick with this one a little bit longer and see if we get some further rotation out of the VIPs. I'm assuming Tesla counts as a VIP at this point. So we'll see how that one plays out. Kind of same deal with Palantir. Palantir was very strong today. It had more positive news come out yesterday with another, I think, government-related contract. But it actually should have been able to trade better and higher today, I feel like, and it didn't. It was just a tight inside day. So we'll see with Palantir. I think there's going to be a lot more insider selling that continues to come out on that. But, continuing to battle those as I slowly build into, some of the longs. And that's just really the game plan right now. I think if I have anything else to talk about, I guess that kind of covers it. I'm seeing Tate's question on the TLT out of the corner of my eye. This TLT, we noted it this morning. I don't know if it's. I don't like to trade the TLT. I know Pat did pretty well with it at one point in the recent past on the long side. I think for a swing trade. That might have been months ago though. That might have been back actually in this move, like this May through first cut move. Oh, thanks, Vikas. I'm going to take a look at that after the meeting ends. Yeah, I don't know. I don't like to swing it. I struggle to swing it. I don't have a good feel on if that's something that I would want to swing long. I more use it as information for how I position myself in the equity market. And I'm just becoming concerned. This TLT below the November low, and if the 10-year breaches that 4.6%, we were saying this back in November, and then I stopped talking about it in December because it seemed like it wasn't going to matter anymore. And now all of a sudden it's kind of back on the table where, you could get a real interest rate problem with this market that, causes us to leg down even further. It's not impossible for the move that started yesterday. I'm not calling for this, but it's not impossible for the move that started yesterday to end up being a real, 10-15% downside correction on the market. Again, not calling for it, but technically we're a little bit more broken now, and if you get an interest rate scare or this dollar continues to rip higher, it would not be impossible to see this market decline 10 to 15% on this situation right now. But at a certain point, I'll be looking for those extension buys, that's for sure. Yes, that's pretty much all I got. I am happy to answer any questions that any of you guys may have. What's Nike doing here after hours? Up. Good, we need it. The Bulls need a win here. Nike's Hill is confident of Nike being Nike again. Good stuff. If anybody's got any questions for the YouTube, feel free. For the VTF, feel free to put them in. How do I get rid of this website? Oh, select your investor type. Just messing around with oh, here we go. This is I guess the allocation of the VIPs, assuming we're talking about the same thing here. Broadcom, Teva. Probably see that in there. AppLovin, Apple, Endeavor, Alphabet. Most of these make sense. TSM. Others are 78%. Cool. All right, over to the YouTube. Thank you, Robert. SPY has support at 585 from Scott. Yeah, that's the November low. Yeah, it's an area to pay attention to. Formula One likes Ethereum if it gets down to 3,000 to 3.4,000. From Kevin G. With interest rates poised to rise, I tried to do some digging on Fed futures and Treasury futures. I'm not sure if I was looking in the right place. Which ticker to monitor this do you recommend? I don't know. I don't know. I don't trade futures. Yeah, we got plenty of people at T3 who trade futures that could find an answer out on that question, but I don't know any of the ticker symbols for anything beyond the most basic stuff in the futures world. So I don't have an answer for you on that one. The 10-year is definitely something I'm looking at though. Yeah, in addition to TLT, TLT is my go-to, but it's definitely not the only treasury ETF that's out there. You've got TMF, which is what is this one again? This is a 3x bull, and TMV you're looking at, which is a 3x bear. I guess you get a little more bang for your buck on those. Docs from Zach. This chart looks great. Super relatively strong, up 5% on the day. I don't have anything else for you on it. It looks great above 54 for a trade if you caught it today. Scott wants to know if I'm happy with my 2024 trading performance. Do I have any takeaways you can share from this year or any lessons? Oh man, that's a great question. That's a great question. Um, I've really noticed that I learned this, years ago from one of the top traders at T3, who told me that a lot of the best traders, and he was this way, tend to make the majority of their money over the course of just a few really key months of trading, and a lot of the other months, the other maybe 9 months of the year, they're kind of grinding it out, making a little bit of money, but like their year is really made by like a couple key events or a couple key trades over the course of a few months, and I've certainly noticed that started to be that way for me. A lot of the early part of 24 for me was like that. I almost don't even remember it, but we were able to capture some good trades. We were bullish in the beginning of the year. I started to get much less bullish into the second half of February. I wasn't really looking to pile longs on. I remember positioning and sentiment were getting super, super stretched, which doesn't mean that the trend can't continue higher, but that the risk becomes to the downside. That washed out in this April move. And then that it washed out the positioning, it washed out the sentiment. I mean, I've just learned, not to almost interrupt myself as I recap the year a little bit. The market dynamic stuff that we talk about has just become such an integral part of my trading game, and it never was years back. It's only been in the last I don't know, probably since like a little bit after the COVID period, that I've really started to learn and integrate that stuff into my trading, and it's so key. It really is. For me, it's become like the ultimate combo of analyzing technicals with an understanding of these market dynamics. And what do I mean by market dynamics? Positioning, sentiment, understanding what the systematic funds are doing that we spend so much time talking about, understanding the gamma profile of the market. That tells me, how I want to approach things, how and when I want to be more conservative, when I want to be more aggressive, and it's been through a combination of those things that we've been able to mark like pretty perfectly a lot of tops and bottoms over the course of the last couple of years. I mean, 2023 was like, I remember us like literally nailing every major top and bottom in the market in 2023. 2024, honestly, I feel like was a little bit less perfect. Just for example, like I was saying, I started to become very cautious in the second half of February, just because that same data was there, but the trend was still intact. So, at a certain point, I felt that the risk was becoming to the downside, but the pullback didn't actually occur until April. So my thought process was like a month and a half early on that, but eventually we got what we were looking for. It washed out positioning, it washed out the systematics, and it enabled then the market to really begin to move back up again. Same thing then began to happen in the July period. I remember we were super bullish for the first 2 weeks of July. It's seasonally like the strongest 2 week period of the year. It was the first 2 weeks of July, and I think the first 2 weeks of January and this November-December period are some of the most seasonally bullish periods of the year. And we were super bullish those first 2 weeks, but it was another situation where we were bullish, but it was also like, oh boy, like there's some warning signals starting to pop up in terms of positioning and sentiment again, and where the VIX was trading. And that led to this pullback, this bounce back. I remember there were some pretty good days in here in this pullback in the second half of July. And then we had, this major positioning washout that a lot of that came from VIX positioning more so than it did from the yen carry trade itself. And then we rallied our way back up. Had a second little scare when I was on vacation here in September. I kind of missed that because I was away. And then, but these two things really washed out positioning, which then made for me a really tricky October, because October, I really was a lot more bearish over the course of the month of October, just because I've seen previously every single election cycle that we sell off into the election, and October tends to be a little bit weak as well. And we never got that weakness. October was weird because the VIX stayed super elevated in October. Like the market should have been lower, but never was able to actually collapse. And I think that the only reason why the market never collapsed, even though the VIX was elevated, was because the washouts in October and September were so big from a positioning perspective that it enabled the VIX to be higher without the market actually rolling over, which for me was a little bit tricky and frustrating. And then the election was tough for me also. My usual election playbook did not play out this calendar year. Every single election I've ever traded, we end up selling off really heavy into the election, and then we rip after the election is over. And it's been that way no matter who won the presidency. When Biden won, when Trump won the first time, when Obama won, it's been the exact same playbook every single time. We sell off into the election, we get bought up after the election. But this one was unique to me because, one, we didn't sell off into the election, and two was, even though I recognized that the VIX was elevated and that you could get the Vegas squeeze that we inevitably got on a situation where there is a clearly defined president, I was very, very worried going into this election that there was going to be one of these situations where it's like too close to call, and I really felt that by the next morning, the day after the election, if it was too close to call, that it could be a big problem and lead to actually a real sell-off in the market. So I didn't do what I normally did, and obviously I was wrong. We had a very clear winner on the election, and then we had the appropriate Vegas squeeze that came from it. But I went into that election very, very hedged. I had a lot of shorts on the index level. I had longs on too, but my shorts got very much squeezed that I had into this up move. And then this became a tricky period because now it was like, all right, I'm screwed on these shorts that I had into the election because I was nervous about what was going to happen on the election. But we're now like kind of an extreme extension to the upside here, and I don't want to just dump shorts into extreme extension on the upside. As a matter of fact, that's what I'm supposed to actually put shorts on. So, I kind of managed to not only hold on to those shorts, but I actually added into them when we hit like that day 3 period. I remember, I think this was a holiday, like that, was it November 11th here? Was it Veterans Day, where the bond markets closed and the stock markets open? It was a very tight day. And I was like, oh my God, the market's not going down. It's a day 4. We should be able to go down. And then we finally got that pullback. But that pullback led to then getting out of those shorts, not taking I didn't take a loss in any of them except Palantir, which I'm still in and still battling. But all the index level shorts, I ended up, not taking a loss, maybe making a little bit of money because I was down a lot, but then I made a bunch with the ads. But then I was like, all right, I'm out of these shorts and I'm loading the boat to the long side and was able to make, really good money in this last period up. So I know it doesn't directly answer your question. It's kind of just a recap, but lessons and takeaways. Man, so one thing is really bothering me about my year this year is the vacation that I went on. So, I love to go on vacation. I love to travel. I travel a lot. I try to go away a lot. But usually when I travel, I trade. Even if I'm not trading as aggressively or if I'm taking off, me taking off kind of means like, my right hand man Pat's gonna step in and do some more work for me on the meetings, and every once in a while Josh will accidentally help also. But I did something different into this vacation, and it ended up costing me a lot of money. Where I was going to Japan, and it was going to be I didn't want to be up all night managing positions and trading, or even if I just traded the open, I just didn't want to do it. And every year I joke, this year when I go on vacation, I'm going to liquidate my positions. And I didn't fully liquidate them, but I got out of like a lot of exposure. And everything that I was in, everything that I got out of ended up working really, really well. And it ended up actually being a big drag on my return because I was working through some stocks that I was swinging to the long side for quite some time that weren't really giving me the moves that I wanted. And then when I liquidated those positions, they like finally went. I can give you some examples. Like I was in I like liquidated Snap somewhere in here. I forget exactly what. I would have held through this move somewhere around 9, and it was size, and that move to 11 would have really paid. Unity, I kept Unity, but I like closed out of like, I don't know, half my position or maybe 2/3 of my position, and that was also right here at like 1650 or something like that. Then it ripped up to 23, ripped up to 28, and I just didn't have as much stock as I would have otherwise. I basically did the exact same thing in this path, where I reduced my position pretty significantly, and then it kind of went. I mean, it was kind of like just one name after the next, almost at their floor. I liquidated them, sized them down. What's the takeaway from this? What's the lesson? Don't go on vacation. I don't know. If that's the lesson, I don't want that lesson because I like to travel. But it definitely hurt me doing that. So like I don't know. It's something that's actually been bothering me for months. But I try to not let it impact my trading. But I can tell you that like the most amount of money that I've made now for the second year in a row has really been into the end of the year. In 2023, I had that great call out to go, super max long at the end of October, and then we caught this, insane November followed by a really strong December off that seasonality. And then, I really, really loaded the boat on the long side here on this November pullback. Made a lot of money with this up move in the second half of November into December. And also then started to do really well with some of these trades, like the MSTR, the China trade. This China trade is one of the trades that really made my year this year. I was long into this move and then shorted the top of the move. I remember that gap down in that yin. I had a big position in this thing, short. It closed on highs. I remember waking up that next morning when yin, closed at 55.50 and opened up at 40 and change. And I was like, I remember just like opening up my laptop at 5 a.m. or whatever in my apartment, like I typically do when I'm in the city, and going, holy cow, how am I up this much money in this position? Little bit of luck, but also it was the same kind of extension rules that in the back half of this year, I tend, for anyone who's newer on our team, I tend to prefer to be like a with trend trader. But the back half of this year it's just been one opportunity after the next to take advantage of just insane moves on the other side. So we caught the China move up, we caught the China move down. the MSTR here was like a big trade to the short side. It was that exact same play. Palantir, even though I've suffered and I'm down Palantir over the course of the month of November, December on my short, I was able to make a lot of money on this short this day, which helped me to, recoup a lot of the losses. So now my loss in Palantir is I'm not gonna say it's minimal. That would be a lie. It's less significant than it was, but I'm still working it. I'm still in it. Tesla was another one that was tricky, but that kind of day 4 push through failure that finally led to this breakdown. And then last but not least, the QUBT is probably one of my top. It's definitely in my top 5 trades of the year, and did really well with it. So I don't know if that maybe answers your question a little bit better. But there was a decent part of my year in the beginning of the year where I felt like I was it's kind of like I was describing. I was kind of grinding out like a little bit of a living for myself. Making a little bit of money, but it was like nothing to write home about. And and then this day here, that August day, was insane. That Monday morning, I was down the most I've ever been in my entire career into that gap down. I was trapped in some stuff, but still recognized the opportunity for what it was, and I was screaming from the rooftops that everybody's got to buy. And that was one of the best buying opportunities of the year. It wasn't the most positive day I've ever had in my career, but it was the biggest upswing in P&L that I've ever had in my career, because I was down. I was down that Monday morning, probably almost 3x what my worst day in my entire career was. And then instead of panicking out, I was screaming from the rooftops that everybody has to be buying that day, and bought everything I could get my hands on myself. I was having to call up T3 super early in the morning, call the CEO to get my risk limits increased so that I could take advantage of what I felt was this massive opportunity, even though I was down just like a boatload of money. And that was one of the buys. That was one of the buys of the year. That was one of the buys of like the century. Very, very similar to August 24th, 2015. Very, very similar setup. That was also caused by a currency scare that caused a massive gap down in the market. That was the bottom of the year for that year, and led to a huge buying opportunity off of that massive downside extension. Yeah, also similar to that Russian invasion day. That was another one of those days. Just coming in screaming at the rooftops. Everybody's got to buy everything they can get their hands on. So that was a cool question there, Scott, in the YouTube. I appreciate you asking the question. I'm going to circle back to a question in the VTF before going back over to the YouTube from John here. What is a better environment for or process to buy larger size longs during grind up small up days like we saw leading into the Fed this week, or after big drops like yesterday's 3%, then looking for larger size longs? I'm going to say the second, but not with the example that you just gave. Coming in and taking big size longs after a single down 3% day is not the way to do it. You want to have that real extreme, like borderline panic downside extension. Those are the best days ever to buy, not like today after yesterday. I'm hoping that today and yesterday lead to one of those opportunities. It may not. Probabilistically speaking, it won't, but it may. But like some of the best opportunities ever to really come in and go long, like I was just describing, those that once every year or two day where I'm like literally screaming from the rooftops, everybody's got to buy, everybody's got to buy. Like I normally don't like to tell people what to do. I like to guide people on the thought processes that can enable them to do what they should do and figure it out on their own. Exceptions, this day, August 5th, this year. That was one of those days. That's a huge day 3 to the downside. On the open, there we've got $27 of downside extension. $27 of downside extension from the ADMA. Remember, 10 plus I start to consider to be extreme. $27 on a day 3 is like, how much buying power do I have? Rich just mentioned the Russian invasion day in 2022. That's another like similar example. That was this day. That was this day here, February 24th, 2022. We had 1, we had 2, we had 3, we had 4. This was a day 5 gap down. At the open, we were $23 extended to the downside. And keep in mind, this is when the SPYs were trading at 411. So, percentages do matter a little bit. Gap down on day 5, $23 worth of extension. And the gap down was on news that everybody already knew was going to happen. So it should have been priced in to some degree to the market. You get a gap down on that. It's almost in some ways like an arbitrage opportunity because everyone knows it's going to happen. It should be priced in the market. And then you get this insane gap down. We gap down from, 422 to, 411. We had $10 gap down on the SPYs. These days don't happen that often. Once, honestly, every couple of years. But if you take advantage of those days when they do come, I mean, those moves, you could make your entire year just on that, right? And that's what oh man, what's that really nice guy that I met in Vegas? I'm escaping on his name. Brightstein, Lance. But that's what that guy does now. He only trades these opportunities. He's like, I'm retired. I'm just focused on charity. But when you get one of those every 2-year opportunities, then I'm gonna, come in and make millions of dollars on the move and then go back to being retired. They don't happen that often, but when they're there, think about this swing. You bought 5, 10 of the SPYs that day, or pick any stock, type up almost any stock. You bought 5, 10 of the SPYs that day, and then you're at 562 2 weeks later. I mean, these moves are massive. And again, that's just the market, let alone your stock. Or that day I was just looking at, that was also a monster multi-day swing trade there. 510 to the downside, bounced to 540 over the course of 3 trading sessions. Those are the days when you want to come in and look for larger size longs and really load up the boat. But again, that happens once every couple of years. So we got to make a living the rest of the year. And that goes back to understanding your market dynamics and your technicals and, participating in the uptrends and participating in the grinds. I mean, you could have just been, stop saying so much. You could have just been participating in this, uptrend. I just said it again. In this uptrend here that went on for 3 months. Buying the dips, selling the upside extension, rebuying the dips, working the upside grind, maybe becoming a little bit more cautious like I did the second half of February when you see that the positioning and sentiment are getting a little bit more extreme. But I hope that helps on your question there, John. From Rich. Thoughts on shorting the inside day and down tomorrow or shorting a gap up? So I think you could look to short a gap up again tomorrow. I think that bounces in this market are shortable. Shorting the inside and down is a little bit tricky because you're going to be basically shorting near extreme extension, which isn't to say it can't work on a momentum trade. If I did it again. But you could get big follow through on just a quick momentum trade there, but I would be a little bit careful on the extension at that point. So let's assess it in the morning. Let's assess how we gap. Back over to the YouTube from Giancarlo. What's up, champ? I chipped my way up over 4 to 5 days, taking small wins, but drives me crazy seeing how much money I leave on the table. I then try staying in the trade. It works against me, and I give back 1 or 2 days. Sure. So it sounds like you need to assess your process here a little bit. Why is it that your trades work great for 4 or 5 days and they work even bigger than your expectation, bigger than when you're getting out, and then you're like, all right, I'm gonna size up, and then the opposite happens. That sounds like that sounds like a lack of consistency. You need to make a rule adjustment that enables you to hold your winners better, not hold your losers more, which is what it sounds like if you're trying to stay in a trade and then you're able to give back multiple days by staying in a trade. Don't hold your losers more, but have game plans in place that enable you to hold your winners more, and then be consistent. I did it again. If you are if you are buying, or you're taking your trades every day and you're liquidating them fast every day, and then all of a sudden today I'm gonna hold them longer, it doesn't work, and then tomorrow you're switching back to holding them less. That's not consistent. So, I did it again. Now I'm annoying myself by catching myself saying, maybe I should just let myself say it. It's hard sometimes to think. Yeah, so consistency is the key to success in the business, right? So what you're describing to me is a consistency problem. You are taking your profits too quickly, then you decide to hold for longer, and then it doesn't work. So be consistent in the approach. Be consistent with the rules that you establish for yourself, and then you won't just be holding for longer moves on the 1 or 2 days when it doesn't work. You'll be holding it for longer moves when it does work as well. Hope that helps. From Michael B. Used to trade with us, still attending the meetings, love learning. Appreciate all the positive commentary there, Michael. I mentioned MVST to you last year. My thesis is still the same. A growth story here. My target is $10. MVST. Yeah, I remember the mention on that MVST. Oh, wow. Look at this thing starting to wake up. Yeah, starting to wake up here. Good day today. Technicals look good above 130. I don't really know the stock well, even though I do remember looking at it in the past because I know you've mentioned it in the past. So thank you, Michael. We'll try to keep it on the radar. From GBS, would you be able to talk a little bit about execution process in the pre-market and open, especially on busy days when you want to be in multiple stocks and managing risk? Sure. So execution process always comes down to the game plan that's established for the trade. The game plan that you establish for the trade is based on the type of trade that you're taking. So, first question is, what type of trade am I taking? Counter trend, with trend, breakout, momentum, whatever. Then you figure out where the stop loss should be, how you're managing the risk, how you're managing the reward on the trade, and then you want to focus on best execution practices. So a lot of the times, like when I'm doing my morning research, so I do a ton of morning research every day. I try my best to create a short watch list every single day of stocks and trades that I think could work. So today, AI short, MSTR short, TPR long, XLE, XLU, XLB, potentially long. Those are bigger picture ideas based on a bigger picture thought process and thesis based on research. When I write those ideas down for my little list, that does not mean buy every stock and short every stock I wrote on my list. A lot of them don't work. A lot of them never actually trigger. A lot of them, you get more evidence when the market opens that instantly tell you that the idea is wrong, and you don't even want to be involved in it. So they are ideas based on bigger picture daily chart setups and bigger picture, qualitative fundamentals or research or whatever. And then when the market actually opens, you're assessing how the thing is trading to identify if that idea still seems to be valid, and if so, how to actually execute it. And that's what I talk about, I guess, a lot in those morning meetings. Also, it's like, all right, this is my idea, but I want to see that there is. Sometimes I'll say like, so for I wasn't for today, but sometimes I'll say like, you could potentially short on like, if you see downside momentum coming in early, you can short that momentum and put a stop at the high. Otherwise, if it's working its way up, you look for that shooting star upside pivot candle for the actual execution. There's not too much of a difference between executing pre-market and the open during the day. There is a little bit. The biggest difference, pre-market, is that there's not as much volume and as much liquidity. So you got to be very careful on things that don't have much liquidity, because you can sometimes get bad prices, or you can get trapped in something as it goes against you. So you got to be a little bit careful on that. Most of my execution, if I'm executing anything very early in the pre-market, I'm executing because I had a game plan in place already, and I'm already swinging it, and it says I'm supposed to buy or sell at a certain price. And if I have a game plan, I'm swinging it, and it says I'm supposed to buy or sell at a certain price, I do it regardless of the time. If it's 5 o'clock in the morning, or 5 o'clock in the afternoon, or noon, if it's trading at the price I'm supposed to execute at, then I execute. As far as like new trades go, if I'm executing pre-market, it's probably 8:45 or later, where there's a little bit more volume, a little bit more liquidity. And then again, making sure that my sizing is right. A lot of times if I'm doing that in the pre-market for a new position, it's a feeler, it's not a full size. And I'm hoping to find an opportunity to add size when the market actually opens. So kind of a broad question that you gave me there, but I think I covered it about as well as I could. I hope it helps. What type of routine do you have in order to optimize execution? It's not a routine. It's just understanding what execution setups look like. So the ideas come from the daily chart, come from the research. The execution comes from 5-minute and 15-minute setups. 15-minute setups, there could be a whole ton of them, but that's how you try to execute on a small time frame for potentially smaller time frame risk in order to have more like daily chart reward. So I hope that helps. It was a big number, Scott. It was a big number. It was a big 3-figure number. 6-figure number. A big 3-figure number. Yeah, I was down so much that day. I was down $700. Oh man. From Jim in the VTF, curious why you don't use 1 or 2 minute charts for entries. I know you dislike them. I just think that the time frame's too small. I think there's too much noise on that time frame. I don't feel like I get a very clear, clean picture on a 1 minute chart or a 2 minute chart. At that point, I would almost rather just be looking at the tape. The 5-minute chart, I just find it builds a little bit better. There's less false signals. It's more of a truer chart. And I don't, like, I'll trade a 5-minute chart. I don't trade a 1 or 2 minute chart, because then you're competing with the HFT algos. And I think if you try to compete, and again, you could use a small time frame chart where you're just using it for execution. So maybe you're not competing with the algos, but like, every once in a while, I'll talk to someone who's like, yeah, I trade 1 minute. Like, I actually trade 1 minute or 2 minute chart patterns. Like, that's what I do. First thing I would say is, if it makes you money, I don't care who you are or what the strategy is. If it makes you money, then do it. But for me, it's not for me. I think that, if you're purely actually trading 1 and 2 minute charts, you're competing with HFT algos. And I don't think that we can compete with HFT algos. That's their realm. That's their world. I can compete with AI. I can compete with algorithms that have been around for a long time now by trading in such a way where it doesn't matter what they do, and recognizing that in the equity market, which is different than a market of contracts. In a market of contracts, there's a winner and a loser. In the equity market, wealth is created and destroyed. I need to trade in the realm where my impact is minimized and I'm not competing against them. And I feel like that's what I'm doing when I'm looking at a 1 minute chart and I'm getting false signals and the time frame is just too small for me, especially when I'm trying to be big picture on the thought process but execute on a smaller picture. That's just too small. Oh man, all right, that's a lot of talking. I'm gonna wrap it up. Have a great night, everybody. See you all tomorrow.